Hey everyone, welcome back to Corporate Decoder, the place where we try to uncover what corporate jargon really means. And today we are looking at a filing that sounds like it could be about a very special type of stock. But will it be super special or just preferred? Don't forget to join our Discord community linked in the description. It's where we chat about these filings and more. Alright, so we've got a Form 8K filing from the Gabelli Multimedia Trust Incorporated. Now, 8K filings are like a company's public diary where they announce big, important events that happen between their regular, more detailed financial reports. Think of it as a press release with a bit more legal weight. The main event here happened on the 20th of February 2026. It's a date that's important because it's when the company tells us something significant occurred. This is a registered investment company, often called a mutual fund or an exchange-traded fund, so their business is essentially managing investments for shareholders. They are incorporated in Maryland, which is just a legal detail about where they were formed. And this is their IRS identification number, a sort of social security number for the company. Now, the real meat of this filing is about their common stock. Remember, common stock is like owning a small piece of the company. When you own common stock, you usually get voting rights and can benefit if the company does well. They also mention preferred stock, and in this case, it is specifically Series G and Series E preferred stock. Preferred stock is a bit different. It often pays a fixed dividend, like a fixed interest payment, and usually doesn't come with voting rights. The 5.125% tells you the fixed dividend rate. Think of it as a loan with a fixed payout. But technically, it is still ownership. They are dealing in US dollars, which is pretty standard for a US-based company. And they are talking about shares, the basic unit of ownership in a company. This section tells us about something called a material definitive agreement. Basically, it means the company signed a big, important contract. On the 20th of February 2026, the Gabelli Multimedia Trust Inc., ticker symbol GGT, entered into Amendment Number 2 to a sales agreement. Now, a sales agreement is basically a contract that lets a company sell its stock. This amendment means they are changing that contract. Specifically, the second time they are changing it. This amendment allows the fund to offer and sell up to 17 million shares of its common stock. The par value of $0.001 is a very small nominal value assigned to each share for accounting purposes, and isn't really what the stock is worth in the market. The key here is at the market. This means they can sell these shares on the stock exchange, like the New York Stock Exchange, whenever the market conditions are right. It's a flexible way for companies to raise capital by selling shares directly to investors through brokers. This part is crucial for understanding how they will price these shares. They can't sell them for less than their current net asset value per S-share, which is the total value of the fund's assets minus its liabilities, divided by the number of shares. Plus, they have to pay a commission to the sales manager, which is the entity helping them sell the stock. This ensures they're not giving away their stock for cheap. This offering is happening under a special document called a prospectus supplement, which updates an older prospectus. Both are part of a larger shelf registration statement. Think of a shelf registration as a pre-approved way for a company to sell securities at different times without having to file a whole new registration each time. It is a way to streamline the process of issuing more stock. Form N-2 is a specific form used by investment companies. Now we move to item 8.01, which covers other events. This is where they might add information that doesn't fit neatly into other categories. Here, they confirm that starting on the 20th of February 2026, they officially began selling these shares under the previously mentioned registration. So the deal we just talked about, the at-the-market offering of up to 17 million shares, is now live. They also mentioned they've included a legal opinion from a law firm called Venable LLP. This is essentially a lawyer's stamp of approval, saying that the common stock being offered is legally sound and properly structured. It is pretty standard stuff for stock offerings. This section is all about the documents that back up everything else in the report. This is the actual legal document, Amendment Number 2 to the sales agreement, that they filed. It's the contract we discussed earlier, and here is that legal opinion from Venable LLP we just heard about. They also include a consent from the law firm, allowing their opinion to be used in this filing. Finally, this last exhibit is part of a system for making financial data more accessible electronically, often called inline XBRL. It is a way to embed financial data directly into the document itself. So, what's the big story here? The Gabelli Multimedia Trust is gearing up to sell a significant chunk of its common stock, up to 17 million shares. On the open market, they are using a flexible, at-the-market offering, meaning they can time the sales to take advantage of favorable market conditions. They have secured the necessary legal approvals and updated their selling agreements. This is a move to raise capital, likely to invest in new opportunities, manage existing assets, or potentially for other corporate purposes. For investors, this means there will be more shares of GGT available, which could potentially dilute the value of existing shares if the offering is fully subscribed and the proceeds aren't invested wisely. However, it also shows the company is actively managing its capital. Now, looking at the bigger picture for the Gabelli Multimedia Trust Inc. This is a company that operates in the investment management space. Their strategy often involves identifying undervalued assets, and in this case, they are strategically planning to issue more stock. The key for shareholders will be how effectively management deploys the capital raised from this offering. If they can find good investments that generate strong returns, the dilution might be worth it. However, if the market for their investments turns sour, or if they can't find attractive opportunities, then issuing more stock could simply lead to a lower net asset value. Per S-Hair for everyone. The trust also has different classes of preferred stock, indicated by Series G and E, which means they have different layers of ownership with different rights and privileges. This complexity is common in a trust structure. A notable risk here is market sentiment. If the stock market is volatile or declining, they might not be able to sell their shares at an optimal price, or they might have to delay the offering. Another consideration is their existing portfolio performance. If the fund's underlying investments are not performing well, it could make it harder to justify issuing more stock. In conclusion, this is a proactive move by the Gabelli Multimedia Trust to raise capital. It's a standard practice for investment funds to manage their share counts and capital structure. The success of this move hinges entirely on how well they use the money they raise. They need to find smart investments that will grow the trust's value, outweighing the dilution from the new shares. If they achieve that, it is a positive step. If not, it could be a sign of trying to compensate for underperformance. Alright, that is our breakdown of the Gabelli Multimedia Trust's latest filing. What is your take on this stock offering and what it signals for the company's future performance? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps us out, and subscribe for more deep dives into corporate filings, and don't forget to check out the Discord community linked in the description for more in-depth discussions. Thanks for watching. See you next time.